Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's August 1st, and I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I just came back from a 2-day trip with my wife. I've been really busy lately, having fun with the business, loving it. My sister was in town, so we decided to take a quick trip without the kids, right? Which I think we all need from time to time. Again, just working hard, long hours, and, my wife and I are both very hands-on with our kids because, we just love spending time with them. It's the greatest thing ever, like every parent out there. But sometimes, and I think this is for a lot of couples who have kids, where it's not easy to get time with just your wife or your husband, right? Especially with work and everything going on. It's always something, right? Always something. It is a summer and you want to try to get away a little bit. And we really didn't get away other than me taking to a concert for one day. And, so we usually plan a vacation and we've just been so busy that we had to push it off, unfortunately. So my sister here, I said, look, let's just get away for 2 days and go hang out. And my sister agreed to watch the kids, which is awesome. And my wife loves to gamble as a hobby. She's got to gamble and she's got a gambling problem or anything, but she loves playing slot machines. I know. One of the worst bets a person can make. The odds are completely against you. 99% of the people are going to lose money, and payouts terrible unless you're playing, $5, $10 slots a spin or more. Again, I know all the odds for all this stuff, and I've gambled, my dad used to take me to racetracks when I was 6, 7 years old. I was analyzing horses and stuff. So, I get it. But she loves it. I mean, and just hanging out, she smokes sometimes, occasional smoking. Not a lot. Don't send me emails. She rarely does it. But, she'll smoke. I'll have a cigar. We'll have a few beers and, whatever. We go there and expect to lose a few $100s. And so I took it down to South Florida. It's about a 4.5-hour drive. It's to a place called Seminole Hard Rock Casino. And I've been there several times. And Seminole Hard Rock, it's owned by an Indian tribe, which means basically they could set up gambling sites on their own land, if you're not familiar with it. So even if gambling is not legal in the state, if it's Indian territory, they're allowed to put their own casino there, their own rules, everything. And I know laws just changed. I cover this. I wrote about this if you're a subscriber in one of my newsletters. States can now legalize gambling if they want to. Most have not as of today. They are. They have legislation in the works. It's going to happen. A lot more states going to approve it. It's gambling, and you could bet, sports books and bet on games and stuff like that. It's going to be really crazy pretty soon. But as of now, we don't have too many areas. So we had to take like a 4.5 hour trip, which is fine. It's pretty cool. But these Indian casinos, they make their own rules where there's a governing body for casinos in Las Vegas, Atlantic City. A certain amount of payouts have to be made. I mean, they can really do whatever they want there. So they could make their own payout structure, which could be a lot worse. So, in 2 days, we didn't see one person hit any jackpots or nothing. Where in Vegas, you'll see it sometimes. You'll see people and they come around, they take pictures, this whole thing going crazy. You never ever see that at the Indian casinos ever. You could be there for 2 months. You'll never see like a big jackpot or anything. You just don't see it. But they even do things differently when it comes to security. They have their own security, and they handle things differently. And then when things get crazy, maybe they'll call the cops. How do I know this? Because while my wife was playing slots, I like to play roulette. And I know, feel free to make fun of me when it comes to roulette. But for roulette, I love it because, one, I'm kind of lucky when it comes to roulette, and I just bet individual numbers. But I like the risk reward. If you win, you win big. If you lose, fine. So a lot of times I'll go there, play 3 spins, 4 spins or whatever, and, put a little bit of money, a couple numbers, 2, 3 numbers. I just happened to sit down and 4 numbers in a row came out for me. So I won about $900. And it happened in about 5 minutes, right? So everything's electronic there. Now the wheel spins and everything. It's not, but there's not a person there, but there's actual wheel that spins, you put it in, everything's electronic. So they use these electronic tickets, right? You put the ticket in, and then when you cash out, you get the amount of the ticket, and you can put it in a slot machine or anything else. So I won the money. I gave it to my wife, and I think it was around $800 I was on there. We hit pretty good. When you hit just 1 or 2 numbers, you're going to hit good. I happened to hit 4, right, which is really good because now I was like, okay, great. Now we have money that my wife could lose on the slot machines. So I gave her the ticket, and I had another ticket on me for a little bit, for like $60 or whatever, and we were playing again next to each other, having fun, and we got up and walked away. Literally 30 seconds. We walked away, and she forgot her ticket. Something she Never ever does, right? She just forgot her ticket. Oh no, and she ran back to 30 seconds. Ticket was gone. The ticket was gone. We told the lady, and one of the ladies was like, oh, they called security. They were there in like a minute. They tracked the ticket and said that whoever took it's on this machine, which is about 2 rows away. And when we went there was nobody there. But we saw the ticket went in and came out because they had a number of $800. So then they had another security number on it. They had to track it again, and the person went to a kiosk. So all this is taking place probably within an 8 to 10 minute period. The person got outside and left. Now, my wife is like freaking out. She felt terrible, right? She made a mistake. I know it was crazy. It was nuts. And I kind of felt bad too. I was pissed off, but I kind of felt bad. She really felt terrible, but it was literally 30 seconds. So we're talking to security. And I'm realizing like they have their own structure there. We filled out a police report because now they're there for 15 minutes. The person got outside and they're gone. So I'm like, there's nothing they could do. They're like, sorry. I'm like, really? There's nothing you could do? I said, if I stole $1 million right now, I'd get shot before I walk out the door. I said, this happened. You have the person on security. Every place that she went. You're telling me that after she walked out of the door, you don't have security cameras anymore? I said, that makes zero sense to me. You don't know what cab she went in or anything? So they have 2 casinos side by side. They have one across the street. And it's, they could share cameras and security and everything. So long story short here, we found out that the lady was like 75 years old. And what they do is like they have a whole scam in place, and they just look to see the balances on different, people. And sometimes you leave a ticket, and after about 45 seconds, it beeps. The machine goes beep, 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 and so to take the ticket. That's how quick it was because the machine didn't even beep. That she got up and went back. And it was gone. So this lady, 75 years old, took the ticket out. She went 2 rows over, put the ticket in, and took it out. She knew to do that because basically she knows she's going to get tracked, right? So when she gets tracked, it's a different number. So as they're tracking her and the more steps you take, then she can go to kiosk and get the money. Because if she went straight to the kiosk, they would have known right away, and they probably would have caught her at the kiosk. So the fact that they had to go to another machine and then track that number, then go back to security. Anyway. The lady decided to leave. An hour later, we get a call back, and I'm really upset because I'm like, come on, guys. I mean, you really couldn't catch this person. It was 7 minutes total by the time this happened, and it takes like 5-10 minutes to walk outside, from where we were. So I was like, there's no way, and she is an old lady. Said all the cameras and everything, filled out a report. An hour later, gave us a call and said, we found the lady at the other casino. Again, 75 years old. She's Russian. She barely speaks English, and there's a Russian translator there. So the cop goes there, says, she has your money. She says she just found the ticket, and it's a felony. Like if you leave your ticket and someone just grabs it, like whatever, 10 minutes later, it's lost. But if you were really like looking at the numbers, if you're like stalking people, which they have her on camera, it's a whole scam. There's probably hundreds of people that do this in all the casinos because that's what a lot of casinos do now. Then it's a felony. It's a big felony. But it's hard to prove. So they didn't arrest her, but, she opened up a purse and she had probably like 10 more tickets in there. And the cop really couldn't do anything. The cop was really cool. And he's going over the whole thing, the whole story with us. And eventually, we got our money back, which was the most important thing. Now, why am I telling you the story for? Because they get these, this takes place probably about 3 or 4 times a day, and they try to stop it, but they really can't. It's difficult. So you have like Russian outfits that are hiring older people that the cops aren't going to bust their chops or arrest them because they're so old. And they get these people to just go around the casino all day, and they know the system, right? This older lady, 70-something, knew to take the ticket out and put it into another machine, right? This way she wouldn't get traced as fast. Go to kiosk, and she knew exactly where to go, and she went to the other casino, and that's where we had her. They had her on video, and they caught her. So basically, she got off fine. They were like, well, we can't really charge her anything, but we did find your money. But it was just fine when the cop said she opened up a purse that there was like 5 or 6 of these receipts in there, or so she's been doing it forever. I don't know if she gets a percentage, but she had the receipt wrapped around the money. She actually cashed out the money, and she probably gets a percentage, and they say, okay, you got it. It's a whole scam. So why am I telling you this? Because this is just one of probably about 7 or 8 times that I've been scammed over the past 2 years. And I don't know if it's because the way the economy is, where people are throwing around money like crazy. I mean, you look at the, what is it? The crypto industry raised, what was it, $5 billion for new crypto ICOs last year? A little bit more than that. And I've analyzed probably about 300 of these. I think there's probably 1,200, 1,300 now. And the 300 that I've analyzed, I'd say maybe 5 of them are going to become real companies where people can make money off of them. It's a great industry and I love it, but 90% of it is just the money's raised overseas. It's really a crazy industry. Again, I've been researching this issue for a very long time. It's really crazy right now. And the scams that are taking place, guys, you have to be careful. I mean, I had my brokerage account robbed of $25,000 where someone hacked into my email and pretended to be me. They set up my spam services. So anything mentioned from that brokerage firm, so they took out a wire transfer to a third party, which I never did. It should have been flagged. It should have never happened if the broker knew what he was doing. Because every time I've done that, invested private placements or did wire transfers, I pick up the phone and call them personally and give them the information. They set up the email as it was talking to me, and they took my language. They were like, "Hey, bud, how's it going? I want to set up this, So when they were emailing me, it went right to my spam account, so I didn't see it because they set up my spam filters. And then they tried to do another big transfer, and that's when they called me, and they were like, "Did you do the 25,000?" I said, "No." And, we had to fill out a report. This is about 2 years ago this happened. And again, they reimbursed me. So my credit card, when I go for gasoline 2 or 3 different times, I mean, they were able to stop it right away. It was $1 charge, and they tried to charge like $30-$40, and then it was like a $5,000 charge that was declined. But the credit card companies caught them very quick. And just the massive amount of things that I'm seeing. Even when I think I told you this story when I took my wife to a concert about 1.5 years ago, and we got tickets off of someone in front of the place. Legit, thought it was legit, good tickets. I made sure. And they were perfect tickets. They weren't fake or anything. But the thing is, the person went in, and whoever went in just paid, they scanned the ticket. So then the tickets are no good. They're inside, and they probably handed it to somebody. They came out and they tried to sell the tickets. So the tickets were scanned already when we went in. They didn't work. So it's just, again, you could say, well, it's scalpels and scalpers and this and that. But when you look at it, it was kind of like a last minute thing. Let's go see whoever, I forgot what it was. I think it was Bruno Mars or whatever. My wife likes to see. But I want to bring this up to you guys because I've never seen it this worse. Now I have dual authenticators on all of my accounts with LifeLock, where every single dollar that goes into any one of my accounts, they alert me on right away. Plus, they cover you. It's not that expensive, maybe $30 to $40 a month. But again, with all business accounts, with everything, they cover absolutely everything and insure you. But just be very, very careful. I mean, I've never seen it this worse. And someone who's kind of street smart, been around different industries and seen a lot of my friends who are crazy and just stupid things, and they've got caught and they deserve to get caught. I've never seen it this worse before. And again, I don't know if that's because of the economy where money's free flowing, like getting, just thrown around like nothing these days. I mean, a lot of people have equity in their homes. They're just spending money, trying to get into new ideas. Stock market's all-time high. Housing prices are near all-time highs. The amount of scams taking place right now have never been greater, at least for me, the families, the friends I talk to. So be very, very careful, even with emails. You're seeing emails with crazy promotions, and there's brands out there that some of those brands you don't know. Be sure to read the disclaimer. Be sure to read what's going on, because it seems like today's day and age, with everything going on, the amount of information out there, again, if you don't know that person that's emailing you, if you don't know that person that's trying to do business with you, they're just calling you over the phone, be very, very careful, because most of the things out there, unfortunately, are scam. And even the new subscribers that I bring on, they're like, well, is this a scam? Are you really an analyst? Are you this? And I'm like, well, just look on the website. Yeah, but people create fake websites. And they're right. People do. So it's kind of like here, the fact that I'm answering them, they're like, oh, okay, I can't believe that you actually answered me. And, because I like to answer emails personally. But guys, I mean, I feel like I need to tell this story because you have to be careful. And for those of you who didn't happen to, you're probably like, listen to this, go, all right, Frank, get to the fun part, get to the interview and get to the educational segment with stocks. I'm telling you, the people that it did happen to you, I mean, I'll hear from you, Frank, CurzioResearch.com. When it happens to you, it's not fun. It's crazy. And I've been fortunate to get everything back and pretty much, and it hasn't been as bad, but I know people where their identity gets stolen, and you hear about it all the time. And if it does, they can't get it back, and it is a nightmare. So guys, Google has authenticators where you can put 2 different IDs, and they have, a 6-digit password. It's an app that comes up that you could just click it, and, it changes every 30 seconds, and you have to put that in to get into your emails. Trust me, it's very easy to do this. I have I know incredible people who are hackers, who work for large companies, and they laugh at the fact of how much information people put on the internet, especially Facebook and all this stuff. So just be very, very careful. I just felt I needed to tell you that story. Now, it's a good transition because being careful, my guest today is Marc Lichtenfeld, a great analyst and a friend. He's been on this podcast numerous times. So I'm going to focus on 2 key areas of the market that I love, which are dividend-paying stocks and biotech. And Mark is a chief income strategist at the Oxford Club, senior editor of the Oxford Income Letter. And we were talking offline the past couple of days. I thought it'd be great for him to come on about how many people are nervous about the market coming down and how he's getting emails and I'm getting emails. Frank, you're up a lot in this position and it's down 5% after earnings. Are you just keeping this position in your portfolio because it looks good? I'm like, what are you talking about? I'm keeping my portfolio because my thesis is still intact. It's okay. We're up 35% on it and it declined 5-6% after earnings on earnings that weren't that bad. But that's the market right now. If you match earnings, you're coming down 5%. If you miss, you're going to get blasted. That's how it's been the last 3 earnings season. But for some reason, over the past 2 weeks, I've seen more emails, like the nervousness from people. It was just incredible. So we want to address this and show not a bear market survival guide, right? Because we don't have crystal balls here, but what's the best plan of action? How can you protect yourself? Do you need to worry about it? If it's longer than 3 to 5 years and you're in this market long term, could you hold stocks, which is difficult, right? Because we say you shouldn't worry about it, but you hear about millions of risks every single day where they get inflated and these news services have an agenda and it's so nuts and everything. And we're going to cover some of the good areas to invest in, safe areas to invest in if the market does pull back. And should you be worried, right? There's a lot of positives, a lot of negatives, but the market usually doesn't crash when everybody believes it's going to crash. It usually happens when it surprises people. So if you're a long-term investor, should you be focused? Should you, reallocate funds to different sectors that are maybe safe havens, a little bit safer? And we're going to cover all that stuff. Great segment. Of course, Mark's going to give some of his favorite picks as well, some conservative ones and some aggressive ones that could look very, very attractive if the market does come down. And then in my educational segment, I'm going to break down one of the best strategies I use that's helped me generate amazing returns in this very risky sector. Sounds crazy because we're talking about maybe the market comes down, but when the market does come down, this sector gets destroyed so much that you see stocks trading below the cash they have on their balance sheet, the net cash. I mean, people just run to the exits. They don't care. And some of you may know, if you're a subscriber, you know what sector I'm talking about. But I'm going to explain one of my favorite strategies that's generated amazing turns for me in this sector over the last 7 or 8 years. Again, I've had numerous strategies in this sector. Some worked, some didn't. A lot of learning experience with my 25-year career. This is something that has worked time in and time out. And those gains are usually more than 100% gains. And they take place usually within 3 to 6 months when these factors happen. So guys, you definitely want to listen to the education segment. Trust me, it's going to not only save you a lot of money, but it'll probably make you a lot of money long term. Now, let's get to my guest, Marc Lichtenfeld, who's also going to talk about this sector, trying not to give it away too much, but I think I'm kind of giving it away here because he is an expert at this sector. And you know what? Let's just give it away. It's going to be biotech. We're going to do a lot on biotech right now. And let's get to my interview with Marc Lichtenfeld right now. Marc Lichtenfeld, thanks so much for coming back on the show.
My pleasure. Thank you for having me.
Well, we were talking offline and kind of amazing because we're getting the same emails. I'm getting it from my subscribers. You said that you're getting it from your subscribers. I don't know what the timing is or the market is or the sentiment is, but it seems that people are more nervous right now than they've ever been. Even with stocks, earnings season, we've seen the past couple of earnings season where even stocks that are beating are coming down a little bit and stocks that miss are getting destroyed. So I guess maybe it's a little worse or people get more nervous during earnings season because there's a lot more news flow. But what are you hearing from your subscribers? Because is it more that, hey, should we sell stocks and get out of the market? Or is it kind of like, hey, Mark, I'm getting a little nervous type thing? I mean, is it just over the top or is it kind of like just a little worried on your end?
So basically, what I'm hearing, people are getting nervous and they are looking to us to let them know when to sell, and not even on individual stock. Like, it's not like earnings are bad, are you going to tell us when to sell? More like the market's down 3% in the past week. Is this time, or do we need to get ready to pull the ripcord? And one thing I try to really make people understand is that no one has a crystal ball, and anyone who says they can tell you when it's time to get out of the market is either lying to you or to themselves. Because I've never seen anybody make a big, bold market call that this is the top and it's time to get out. I've never seen them be right twice. I've seen some people make some great calls in the past, but I've never seen them do it twice. So it's really important to understand that no one knows when the bull market is going to end. We can certainly look at all kinds of different information and details and try to put some pieces of the puzzles together. But the market has a way of doing the unexpected, going further, both upside and to the downside than you ever expect. And it's just kind of important to understand that it's very, very difficult, and I would say impossible to predict when the market is going to top and when it's going to bottom.
And let's go over some of those factors, because what we see right now is, I mean, look at the news flow, right? I mean, we have midterm elections coming up, so you're going to see crazy talk on both sides. I don't want to get into politics here. I'm just saying what the news flow is. So you're also seeing, tariff is hurting the markets and crush the markets, but yet we also have tax reforms that benefit significantly. And if you take that and couple it with tariffs, I mean, the benefit is huge. Instead of getting 100% benefit, you're probably getting maybe an 80% benefit from tax benefits when you combine the two. We're seeing earnings growth stronger than they've ever been, I want to say, since 2011, 2012. But, again, a lot of this could be factored in. And we're seeing, though, rising interest rates, right? So it's funny because I'm throwing a positive and a negative, but you're seeing a lot of balances where people, I can see people getting nervous, but there's also a few positives in the market as well. And that balance is kind of shifting where I think, hey, it's, and the numbers better than anyone, Mark, where the market's been up how many straight years, 7, 8 years. We know the average bull market is a lot less than that, based on whatever study you want to listen to. But on average, it's around 5.5 years. And we're way past that, looking for a correction here. And I mean, what are some of the factors you would look at to determine that? And again, we don't have a crystal ball, but we want to look at as many factors as possible to say, hey, you know what? Here's kind of a time that you may need to worry.
Well, there are a couple of things. I certainly look at the technicals. So, look at the charts, and this market has been going, more or less straight up since 2009. I mean, we certainly have had some dips here and there. But if the technical picture changed dramatically, then that would tell me that psychology in the market has changed. I also keep a close eye on the yield of the 10-year bond, the 10-year Treasury. If that spikes, that suggests that the economy could be getting a little overheated, that inflation is coming. That would make me a little bit concerned. Everybody's talking about the flattening yield curve, so I'm keeping an eye on that. That could be one of those things where if everybody's talking about it, nothing happens. But, in the past, that has been a fairly good predictor of recession. And we know that the market is a forward-looking mechanism. So if we had reason to believe that a recession was coming at some point in the future, then I would expect the market would respond to it first. And you would see the market sell off. And then, perhaps 6 months later, the recession would hit. So those are the kinds of things I'm looking for. But to be honest, it's not something I'm that worried about. And one of the things I always tell my readers is if you need the money that's invested in the market within the next 3 years, then take that money out of the market. And it has nothing to do with where the market is today, tomorrow, a year ago. It's that you can't handle the volatility of the market if you need this money to pay your bills. So if that money is required to pay for expenses, get it out of any kind of risky investment. And the market is even conservative stocks, there's risk there. So for your long-term money, I think you're fine. Even if we're 9 years into a bull market, if you are investing for 10 years down the road, I think you're going to be absolutely fine and you're going to do very well. But in the short term, anything can happen. And if you need that money, I would say take it out of the market. But again, stressing, it has nothing to do with where the market is today. It's just that you can't handle the volatility and the risk.
Yeah, and volatility seems more crazy today than ever because, I mean, you could look, I'm not even talking about, and you know this as well, Marco, past the 2008 crisis, because you could pick any time frame after that and you're probably up. But even if you look before that, even if you go back to the recession in 2000, with the tech crash, right? So you have tech. Could you go back to 1987, right? The Black Monday. Even if you go back further, like all these risks from then until now, like think about if you kind of like fell asleep and you woke up today, right? Because otherwise you're going through Brexit, you're going through tariffs, you're going through, just government shutdowns. I mean, you can go on and on with the risks, but yet, even though the markets are pulling back a little bit, we're still close to highs, right? I mean, so why has it become so difficult? Is it the social media aspect where people are seeing more information now than ever in real time, where it's getting more difficult? And this goes for myself too. I mean, we try to be professionals to take the emotion out, but we see these massive stories come out and then they get inflated times 10, and couple that with so much news flow where people have their own agenda sometimes. It's not that easy for the individual investor to say, "Oh, okay, you know what? I don't need the money in 3 years," but it's still kind of hard for them to really sit back and not pay attention.
Absolutely, and especially, I think especially in the last several years with social media, and then also maybe the last 10 years with 24-hour news cycles and cable news, and just repeating the same headlines and all kinds of websites with glaring headlines as clickbait. Everyone's trying to capture your attention, and the way to do that is often to scare you. And so a lot of these headlines, tweets, and what have you, there are a lot of scary things out there. But if you look back and see kind of what's happened over the past 9 years of this bull market, it's amazing. President Obama was elected, and some people called him a socialist and a Marxist, and that was going to tank the economy and the market further, and that didn't happen. And Donald Trump was elected, and everybody said, and myself included, said that he's too unpredictable. The market doesn't like unpredictability, and it likes stability, and the market's going to sell off, and it absolutely did not. So, and just take all the different crises and different things that have happened over the last 9 years. There were a lot of things to be genuinely concerned about. I mean, I don't think it was just scary headlines for the sake of scary headlines. We've had a lot of real problems in this country over the last 9 years and around the world, and yet the market has gone up. So, it's so easy to say, well, turn off the news, don't get on social media. Most people aren't going to do that, but you do have to find a way to, especially if you're a long-term investor, to really ignore that and just know that over 100 years of market history, the market goes up over the long term. That includes world wars and presidential assassinations and scandals and every kind of crisis you can imagine. Over the long term, investors made money and the market went up. So that you really have to remember that as Fox News or CNN or Twitter is screaming the latest scary thing.
No, it definitely is. And there's two areas of the market that you cover, Mark, that you cover great, and it's income-related investments and also biotech. And I want to cover both of them and start with income. Say if you look at the factors and you see that the market is going to come down, is there any advice that you would give to because a lot of people are like, well, why don't we just sell any stock? But yeah, as you know, covering dividend stocks, there's good ones, and some REITs, pay high dividends. They shouldn't be paying high dividends, and their earnings are coming down, and it's volatile. Is there like a safe haven? Because it used to be consumer staples, but we've seen them. I mean, they haven't really participated as much in the growth of the market over the past year, but these are stocks that usually trade at 16, 15 times earnings, and they're trading at 20 times earnings because they pay a high yield. Is it Apple? Because Apple, compared to the other FANG stocks, looks pretty attractive right now when you're looking at Facebook and Netflix, and, I'll throw Tesla in there, even though it's not in the FANG. But what are the safe havens for people to look at? Is it dividend paying stocks and just, hey, hold these long term? Or is it kind of like, what are you looking at? And say if you do see a market that's going to correct over the next, 18 months or so.
Right. It's interesting because I think a lot of the sectors that traditionally were considered safe havens are not necessarily that anymore. I mean, some of the utilities, utilities were always kind of considered safe havens, but now, coming off record low interest rates, if interest rates continue to rise, that may not be the case. Higher interest rates are usually not great for utilities. Although I think the concern over utilities and higher interest rates is a little overblown. The statistics actually show that they do okay, but it's obviously lower interest rates are better for utilities. Drug companies also were a safe haven. Now there's proposed legislation and all kinds of new rules that could really hamper their profits as the government tries to bring down drug costs. So I'm not sure that that's a safe haven anymore. So as far as sectors, I don't really have a great answer for you. For individual stocks, though, what I look for are companies that have long track records of raising their dividend every year because they typically don't want to stop doing that after 20, 30 years, and companies that are generating lots of cash flow and where that cash flow can easily cover the dividend, so that if we do hit a recession or we do have some kind of problems in the economy and cash flow does decline a little bit, they still can cover the dividend and even continue to increase it. And so, I think people forget that even 2007, 2008, 2009, there were plenty of companies that raised the dividend through those years and had been doing so before. And you look for those types of companies that are well managed, that are able to sustain and continue to grow their payouts to shareholders even in the worst of times. I think those are the companies that you can feel relatively safe in the next correction or even bear market.
And I always say bear markets are great for investors who are prepared, right? So if you've done well in this market and you're taking profits and you're taking a little bit off the table and you're doing okay, I mean, that's the greatest investors. The great investors really go all in when assets are cheap, right? They want to buy up. Even right now, like there's a lot of people that we know that are buying up, gold projects for pennies on a dollar right now because gold's been such a horrible industry. You've seen it happen in biotech. So if you're prepared, now let's say if we do get a market pullback, 10%, 15%, 20%, whatever. You can throw whatever percentage out there. If you're really bearish and think the world's going to end, it's 70, 80%. You're on an island by yourself. I'm not one of those guys. But and one of those guys who predicted that for the last 8 years. But one of the sectors that you cover is biotech. And I would think that since it's a risky sector, they have to generate money. A lot of these smaller companies don't generate revenue, kind of like the junior miners. It'll probably get hit pretty hard, but that provides a lot of opportunity for you, right? Because you're looking at biotech not just as a sector where you look at different technologies, groundbreaking things. You attend conferences every year, some of the biggest ones in this industry. Is there anything in particular that you will look at? Maybe not get to names yet, but just within the sector or within, is it immunotherapy stocks getting crushed? Is it gene therapy? I know there's other things that you looked at, but once these things really come down, they can come to levels where you're like, wow. And what I love about biotech is these companies get smashed. Like they'll trade below cash sometimes because people just run to the exits and don't look at fundamentals, right?
Absolutely, yeah. You said it perfectly. When the market corrects or we have a bear market, people flee the riskiest assets, and especially the small biotech stocks are among the riskiest. So people sell first and ask questions later. And sometimes some of these stocks have been bid up for a while and probably don't deserve the high prices they were getting. But there's plenty of babies that have been thrown out with the bathwater. So you can find some really good companies or that have some really interesting drugs and assets that A, can be developed, or B, might be snatched up by some larger biotechs or drug companies that need to basically need to acquire their growth. So yeah, when there is a correction or bear market and these small biotechs get smashed, as you said, that can be a great time to pick them up. The hard part is when to try to catch the falling knife. That's always the difficult part. But yeah, if you can be patient and do a little bit of homework and find some of these companies, and if there are certain stocks right now that you're interested in, but you think that they're too overvalued, put them on your radar and wait for the next correction. Because one thing about these small biotech, they, pretty much in every correction they do get hit. So next time the market sells off, you'll probably have a buying opportunity.
And it's interesting, right? Because even with the tariffs is supposed to impact, if people are worried about that and that being a major issue, it's going to impact the ones that have the most exposure overseas, where that's why we're seeing small caps actually outperform the large caps right now because they don't have that exposure where they're not going to get impacted as much. So I wonder if that's going to be reflected in biotech stocks. Again, there's millions of variables, guys, that Mark and I try to figure out to determine this. And you're right, though. You never see someone make an amazing bold call twice, right? You see it once because you have so many perma bears that say the market's going to crash for the whole career, and it crashes and they take credit like they're geniuses. And same thing on the way up. You have these perma bulls that just like the market's going to go higher, 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 and they never really change their tune. So it's a good point that you bring up because I can name 20 people that made bold calls, but I've never seen them make it twice when it comes to major market calls, right? And if you take all of their market calls together, because the people that called the crash have called the crash another 7-8 times over the past 5, 6, 7 years and have been dead wrong. So, they don't talk about those. They don't talk about the, which I love about this, but it's great. Selective memory is such a great thing.
There are a lot of these bears, as you mentioned, who have made some great calls and maybe got you out of the market in '87 or some other time, but probably kept you out of the market from 2009 until now. And there are a lot of those people out there too. So you have to be careful who you listen to on the big macro calls.
No, absolutely. So, all right. What I love having you on, and people love to hear from your market, is you're always giving out ideas and things like that. Do you have any ideas to share and consider like what we're talking about here, right? Where it's kind of a crazy market. Maybe stocks have come down. You're a person that always mentions your past winners and losers. Where you mentioned Mattel once, you also mentioned Chevron, which did fantastic for investors. I know Mattel came down, but your track record is really great on this podcast. So I know a lot of people love those picks that you make. And considering we're talking about, well, the market could come down a little bit. I'm wondering some of the ideas that you're looking at right now, or that you want to see, maybe that are not in your portfolio or in your portfolio, because people love to get stock picks on this podcast, as you know.
Sure. So I'll talk about two stocks I'm looking at. One is Abiomed, ABMD. It's a company like they talk about the stock that got smashed. It's not a small cap, but their earnings, they were a total high flyer. I mean, that stock has gone straight up this year. And their earnings last week were actually pretty good, and they raised the lower end of their guidance, but I guess it wasn't enough for Wall Street. And so the stock got hit pretty hard. And so, if the stock can kind of regain some momentum, I think this is, this could easily retrace its losses over the past week and get right back to the highs. This is not, like I said, a small cap development stage company. This is a company that sells heart pumps. They sell them around the world. They just got some approval in Europe and Japan for some of their new products. They're approved in the United States, and their products are considered, best in class. So I think that's one where you can take advantage of a recent drop. On the smaller side, a really interesting technology by a company called NovoCure. NVCR is the symbol. And what they do is they attempt to treat cancer using electrical fields. So it's not a drug. And so their lead candidate is in glioblastoma, which is a very aggressive form of brain cancer. And basically you kind of wear this it's kind of like a cap, and it sends electrical signals into the brain. And they've found in early stage, this is early stage stuff, but in early stage trials, in combination with chemotherapy, it extended progression-free survival, which progression-free survival is how long until a tumor starts to grow again. So they stop the tumor from growing, so how long it stops growing. And they found that it increased progression-free survival about 25%. So from 16 months with the chemo alone to over 20 months with this technology. And they just released some new data on ovarian cancer, which is even better. And on ovarian cancer, it doubled progression-free survival. So that was pretty exciting. So, again, early stage stuff. They don't have any products on the market yet, but I think it's a really interesting technology and a little bit different than kind of the typical immunotherapy or other types of cancer drugs.
Yeah, Mark, and I love talking to you about this because I think the last time you came up too, and you always give me new technologies that just blow me away. I mean, and this stock I'm looking at it right now, and it has run up a little bit, but I'm not even familiar with this technology. I was very familiar with immunotherapy, like in 2011, 2012. We did well with those stocks. They came down a lot though as well. But when I see like these types of new technologies that I never heard of, it just makes me explore and go into more. I'm sure there's other companies maybe exploring this as well, maybe small, but this isn't that small of a company. I mean, it's a $3 billion market cap. So, people are taking it very serious, it seems.
Oh yeah, for sure. Yeah. This isn't one of the real tiny ones. Part of it is because their stock has run up a little bit, but I do love looking into the biotech drugs and the immunotherapies and the CRISPR and all that type of stuff. But yeah, when there's something really kind of novel like this, it really kind of makes it piques my interest, I guess I should say. So I do love stories like this, and especially when it's working, at least in early clinical trials.
Yeah, it makes sense. I'm going to ask you this question too. Who are some of the people, because we all have great sources. We all have a lot of contacts. We've worked together at street.com. I mean, probably over 10 years ago now. You've been in these industries for a long time. Who are some of the people that maybe you follow or listen to? I know Adam Feuerstein is one where, he gets, yeah, pretty high profile now that he covers. I think he's still covering at the street, but, he'll get people because there's diehards in some of these things. If he talks negative about them, he gets probably death threats and stuff and publishes them sometimes, which is kind of funny in a jokingly matter. But is it like people? Is it conferences? Is it just so many CEOs in the industry? Is it something that the average investor could follow to really gauge get really good information on the sector? Other than listening to a person like you, I cover the stock as well, but we're also have great sources that we like to share.
Yeah, I mean, one of the as far as like things that the average investor could find, there are a couple of investors that I follow closely. The Baker brothers, Julian and Felix Baker. They're very well known biotech investors, extremely successful. Sometimes they get in very early on things, and they certainly don't have a perfect track record. Not everything they touch is a winner, but they're pretty good. And so you can see their public filings, and if you see that they're in a stock, then again, it's not a guarantee that it's a winner, but it's certainly worth paying attention to because they're extremely smart and successful. And then there's just some other people that I know personally who I'll talk with and we'll share ideas. And certain people, when they tell me I should pay attention to something, then I will pay attention to it and dig into it. And again, nobody has a 100% track record, and so not everything that they tell me works out. But it's always worth digging into. And usually, these are people I'll talk with throughout the year, but usually I sit down with them at the JP Morgan conference in January. So kind of the first part of the year is when I'm really kind of digging into a lot of these ideas.
Yeah, no, those conferences are always really big, and I know you always like to come on afterwards and share our thoughts. And I usually share my consumer electronics show thoughts with you because that's the one I attend in January, and back and forth. But so, Mark, thanks so much for coming on the podcast. I will, I'm going to mention it, right? By now. Any upcoming events? And people who are familiar with this know, if you're a new listener, Mark is an unbelievable ring announcer. Unbelievable. He's been on TV, ESPN, everything. And can anyone see any events coming up? Because I've seen it firsthand and on TV, and fantastic. And I know that's your passion. So.
Thanks. Yeah, I actually just did an MMA show about a week ago. Nothing is on the books yet. I've been talking to somebody, and hopefully something big is coming, but nothing confirmed yet.
And what was the one that you just did?
It was an MMA fight here in West Palm Beach, and I was brought in because the main event, the fighter is somebody who I've known for a very long time. He's a friend, and this was his farewell fight. So he asked if I could come in and just do the main event for him, which was an honor for me, and it was a blast to do it. And he got the win also, which was nice.
Yeah, no, that is great stuff. Well, Mark, as always, we'll try to watch on TV. I know there's a lot of people that follow you for your stock picks as well. I follow you for your ring announcer first, and then your stock picks, I think. No, I'm kidding. I just love the fact it's so different. I love talking about it. So, but Mark, as always, thanks so much for coming on the podcast. I mean, you're always sharing ideas. You always give us insight to everything that you're looking at. I love having you on at least every 3 to 4 months just to pick your mind. And I always get great feedback when you're on. So I really appreciate it. I know my listeners do too, buddy.
Oh, anytime. Always happy to be on the show.
Okay, it's great stuff from Mark. I love the fact he's always giving ideas. He's someone that cares about his subscribers. He's a guy that's come on here, and if he gives you losers, he's always quick to say, hey, I was wrong on this. Just like you said, with Trump getting elected, which I love, has more winners than losers being on this podcast. And again, I'm a big fan of people who really care, who understand that subscribers, that responsibility of people investing money based on what you're saying. And sometimes that's gets lost a lot in this industry where people are just like, oh, let's hype this up and make these crazy projections and stuff like that, where people are actually basing their lives on what you're saying, right? They're taking money out and saying, okay, I got to take money out of the market for the last 6 years because you told me the market's going to just get destroyed by 70%, 80%. ATMs aren't going to work, right? How many times have we heard that? Go to another country. It's going to be riots in the streets. And they forced a lot of people out of the markets. And they don't care. They're making money. They're selling subscriptions, but in the end, you're losing those people, your clients' money, right? So, Mark's a person that really understands that. He's a good friend, he's a good analyst, and I love having him on. I always get great feedback. But again, this podcast is about you, not about me. Let me know what you thought at frank@curzioresearch.com. That's frank@curzioresearch.com. Now let's cover the sector I was trying to mask, but I had to give it away. Try to tease it, and it's biotech. And Mark covered it. He's a great analyst. He told you about some of the sources and stuff. The Baker brothers are interesting because that's someone I look to. They're the Warren Buffetts of the biotech industry. It doesn't mean that I invest in every stock that they invest in, but what I like to see is when the 13Fs come out and a stock gets nailed, like a small cap stock gets crushed, or even small caps in general. If I see the Baker brothers like taking a position in it, because they usually don't take small positions, they usually take big positions right away, or they'll scale into it. So they don't take a small position and leave it at a small position and get rid of it. That's not, they're too big for that. Usually when they're taking a small position in a smaller company, they're going to build it up and it provides a little bit of a base. So it hits my radar, and then I'll dig into more research. I'll call my contacts and see, more about technology, more about the CEO. And if I like it, I'll still keep it on my radar because this sector by far is one of the most volatile. You can look at any major biotech stock and pull up their history, and you're going to see massive ups and downs. None of these things go straight up. They look like they go straight, and then they get nailed. And that's just the way the industry is, especially during their early phases, because it's difficult to get drugs past. Something not that difficult to get past phase 1. They don't require too much, but phase 1 to phase 2, like getting past phase 2 is the most difficult stage to get through. Because after phase 2, then it's kind of like, okay, we need to know more about safety. The study's got to be even bigger for phase 3. But if you look at statistics, the most difficult part of the whole process, which, by the way, guys, takes 12 years for the average company to go through. So you get a 20-year patent on a stock, and it takes 20 years, right? But out of those 20 years that you have it's 12 years to bring the drug to production. If everything goes well, those costs are more than $1.5 billion. Yeah, that's like average out of like 4 or 5 studies. Some say it's $2.5 billion. Some say it's a little bit less than $1 billion. Think about that, $1.5 billion. So you have 8 years, maybe the first 3, you make up all the money, all the expenses in the first 3 years. And then finally, you wonder why these drug companies raise their prices so much, because they really don't have that long to sell their drug. I'm not talking about, I don't want you, it's not political or anything, because the price, they raise their prices incredibly, which is insane, but you can see why they do it. Because they don't really sell it from the day they get the patent. They sell it 12 years after that. And the first 3 years, that's where you're trying to recuperate your money, and, maybe take 3-4 years before generics just basically say, okay, now we can copycat the drug and lower the prices, which is great for all of us. But it's really a crazy process when you look at it. So how do you make money in biotech stocks? Because each one of these, like a junior miner does, you'll go through drilling results. If your drilling results are good, it'll pop. So if you get good phase 1 results, it's going to pop. Good phase 2 results, it's going to pop. Good phase 3, it pops. But any negative news results in a massive, massive decline in these stocks, like 40, 50, 60, 70% sometimes. It's insane. I've never seen it. Like junior miners, if they don't report great drilling results, they'll fall 15, 20%, which is these stocks get annihilated. And for me, I always want to look at that news, because the FDA will sometimes say, okay, the study would be so bad, right? Or the independent people look at it, so it would be so bad in a phase 1, phase 2, wherever it is, that the company would come out and say, we're discontinuing the drug. Then all bets are off. All bets are off, okay? Mostly. You got to look at the rest of the company's platform, what's in the pipeline. But a lot of times they're just looking for more data. And early results were positive. And sometimes when you look deep within the data, it's something that's minor that you say, okay, maybe there was deaths that were caused in this study. And you have to realize a lot of these studies, especially on these drugs, take place with maybe if it's immunotherapy and you're trying to extend the lives of patients. So you're basically giving these people the drug who are, pretty close, unfortunately, to passing away. And they may pass away to other factors. So they may say, wow, look at the deaths. How many deaths are in this data? They right away they think it's a drug. And there's independent people that are monitoring this, and they may come out and say, well, it wasn't because of that. Or maybe they say, well, you know what, we just want to see a little bit more information. And it might take another 6 months, 9 months, maybe a year for them to submit that information. And during that time period, people they sprint to the exit. You'll see the stock just get destroyed. It'll go down 50%. In the next 3 days, it'll go down another 20, 10, 15. I mean, the stock will go, if it's a $10 stock, it'll go down to like $2 or $3. And when you analyze that and say, wait a minute, there's a shot for this thing to still pass. And now at $3, with the cash you have in your balance sheet, you have more net cash than you have what is bigger than your market cap. I mean, the market caps will fall to 100 million. They're sitting with 125 million net cash. Granted, you got to look at their burn rate, how much they're going to spend over the next year. I mean, if they're spending $500 million on the study, I'm exaggerating this, but $500 million, then that's not a high cash balance. But if they spend $60 million the last 12 months, they don't have to raise money. If the company has other drugs in their pipeline, you're getting everything for free. If they have a good management team, you're getting that for free. And a lot of times in that 6-month period, a 9-month period, you could buy these stocks next to nothing. And again, they're assuming that this is a dead drug. And if they come out with positive news, it's going to recuperate. You could see a stock go to 2 to 5 to 7 to 9. I'm not crazy on this thesis. And we've used this to generate 180% gains. 180% gains on a company called Newlink in my Curzio Venture Opportunities newsletter. Newlink got destroyed. And I knew they were going to come out. I get to levels of like, I think it was like $5 or $6 or something like that. And then it was a $50 stock 3 years before. 5 months prior, like their CFO left. They lost Roche as a partner. One of their studies came out terrible. Not terrible, but there was another study from Insight that showed better results. So they thought this drug would be worthless. For me, I looked at it and said, I don't think this is worthless. And something we mentioned earlier, the Baker brothers took a stake in it when the stock fell 70%. That's when I took a look at it. And I realized, wow, if this company reports just positive data coming out over the next few months, again, they don't release the exact date sometimes, that this stock will go through the roof. What happened? My timing was absolutely perfect, just like I expected. Actually, I got a little lucky. Not lucky, but it happened, I think, within 3 weeks. Stock came out with positive data after reporting negative data. It was another study within this same drug that they were using, with another sample size. So usually, sometimes in phase 2, phase 3 studies, it's not just one. Maybe they'll have, if it's like a pill that you take, it's smaller dosage, middle dosage, large doses. If it's sometimes they'll have it combined with another drug. So there's 2 or 3 different tests that come out with these things, and they came out with, we got the pipeline for free. The company came out positive news. It went from like 6 to 18 in 3 weeks, and we sold a half position. And then when they came out with another study after that, it wasn't that good. And the stock fell again. It fell all the way down to levels, and we stopped out. We stopped out around, I think we took a 35% loss in the second half position, 180% winner on the other half. And it worked out tremendously. Okay, because I knew the stock basically came down to the levels where the drug didn't make sense, or, it didn't work out. But you're seeing little risk, right? Because you have the Baker brothers coming in, which is a great fund. They took a sizable position in the name. You're seeing a stock that just got destroyed. I mean, the cash balance was almost trading higher than what the market cap was, and there was very little risk. And any positive news would shoot the stock up, and everybody tried to get back in it again and went through the roof, and we sold it. We sold a half position and made a lot of money on it. 3 weeks, guys, 189%. Pretty good gain. It's not an isolated example. And if you look at companies, you could even go back, and we've done this with Human Genome, with a company that, again, it did drug for lupus, and it was, just amazing. And it got destroyed after they received approval, because after a biotech receives approval, what happens? Basically got a bunch of doctors who are scientists, just looking at data, and all of a sudden it gets approved. Well, you know what? You got to start hiring people that know how to operate a business now. You got to buy manufacturing plants. You got to manufacture the drug. You got to distribute it. I mean, there's a whole massive process. And a lot of times you'll see in the biotech world where after they receive phase 3 approval, of course, FDA approval after that, you'll see it go through the roof. And then the stock slowly gets hit. You would think it would go higher because now they're going to generate revenue. But the story's factored in, and now the costs go higher. There's going to be delays because you're talking about people who really don't know anything about it. They got to hire like real people now, real CFOs, real people who understand distribution process. They have to hire sales teams to sell their drug, go to different doctors. I mean, it's a total different, it's kind of like with AT&T. They're getting into a whole other industry, right? AT&T is getting into the media industry more than ever. They're going to have to talk to guys like Tom Cruise and actors and actresses and make deals with them in streaming when you used to be just a wireless provider. Is it great? Yeah, it's going to work out tremendously for them, but it's a total different industry where there's going to be a learning curve. And that's why AT&T is getting hit right now. So when you see biotech stocks, one of the strategies I use is don't buy these things when there's favorable news or they have a good outcome. A lot of that's going to be factored in. What you want to do is try to focus. You can go on FinViz. I'm telling you, even today, I'm not going to guarantee it, but there's probably one or two biotech stocks that are getting nailed today that, you can look at. I see these through my news services, and I want to know what's going on. I'll see a good company down 30, 40%. You can look at Celgene, guys. I mean, Celgene's another great example. I mean, this is a company 2001, 2002, like right at the beginning of 2002. I mean, big cancer company and their signature drug. I mean, they came out with a study saying it might not work, and the stock fell 80% in 2001, 2002. People don't realize that. It fell from like $10 to around $1. Celgene at $1, split adjusted $1. That's how much it came down. Since 2002 to today, I mean, the stock went to like 130, 140. It's about 85, $90 today. But you're looking at 5,000%, 6,000% gains in this stock. Buying at the right time. You could have bought when it broke out and looked at the technicals and maybe bought out after 10 or 12, and now it's 80. And yeah, that's a good gain. But imagine buying that stock on the worst part of that bad news. And you're not going to buy it at the absolute low, but you can get kind of close because these things get murdered when they miss or when they receive bad data. And Mark attested to that. And this is things that I've learned from talking to numerous biotech analysts out there. But instead of going out there and just seeing the news on a stock and buying it, try to look at the recent highs, recent lows. Look at the biotech companies that got killed. You're going to see them all over the place. Happens almost every day, at least a couple times a week. Find out the reasons why. Was it a bad study where they're like, we're discontinue it, then throw it out the window. But if it's kind of like, hey, we have to resubmit this data, it's going to take another year. It's good. And if you look at the cash balance, you look at the management team, and you do a little bit of homework on it and say, wow, you'll read research on it too on the internet. You can find some pretty decent research. Don't trust everything you read, unless it's from me. Seriously. But try to find out, what happened with that study. Was it really bad? Look at the details. Because people just run to the exits and ask questions later. They don't care about the fundamentals. That's the way to make a fortune in biotech. And especially if you're a believer if this market's going to come down, which Mark talked about. I'm not so much a believer that you have to sell out and the market's going to go terrible. I think a 5%, 10% decline in the market is healthy. It's normal. I told you guys already that credit crisis is off the table. You're not going to see where, total end of Western civilization as we know it. That's not going to happen. The banks are just closely monitored now. It's not going to happen. Doesn't mean we can't see a 10%, 20% pullback. But if we do, this is one of the sectors that are going to get nailed. Try to find those stocks if these things come down, because now they're going to come down from the market conditions and the macro. If they do have negative results on one of their tests, analyze those results. See if insiders are buying. Another buy signal. That's what I saw with Newlink. Insiders are buying and Baker Brothers came in. Again, not like I buy everything the Baker Brothers said, but I love to see that Warren Buffett buying a stock that has just crashed by 30, 40, 50%. That's kind of a buy signal to me. It means that he's probably going to keep adding at those levels if it stays there, which provides a floor. And that provides a good risk return for you. So I know that was a little drawn out, but I get a lot of questions on biotech. Plus, it's a pretty good sector. Been outperforming the markets a little bit over the past couple of weeks. A lot of good technologies. Mark shared a couple of ideas. So that's my strategy for biotech, guys. And I cover that a lot in my issues and also put a lot of stocks to work and tell you what individual names to buy in Curzio Research Advisory and also Curzio Venture Opportunities. So, guys, questions, comments, email me, frank@CurzioResearch.com. That's frank@CurzioResearch.com. Again, feel free to email me anytime. I'm here for you. And, just thanks so much for listening. I really appreciate it. And that's it for me. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.